Hello traders, you're welcome to this video and you are welcome back to the Forex Geek channel. In this channel, we simplify Forex strategies to help you trade smarter and more efficiently. Okay, now in this particular video, we are going to be diving into a strategy called twin trading strategy. All right, it's a concept in Forex twin trading. Okay, now if you are ready to step up your trading game and learn how to make better trade decisions with optimized risk management, then you are in the right place. So stick around because we are going to cover everything you need to know. All right, so let us get started. What exactly is twin trading? All right, twin trading. So what does this mean? At its core, twin trading is a strategy where you split a single trade setup into two separate trades. Now, each trade serves a distinct purpose, allowing you to balance profit potential with effective risk management. So now here is how it works, right? Here is how it works. You enter two trades on the same currency pair with identical entry points but different take profit and stop loss levels. So this is a demo account. All right, this is a demo account. So for the purpose of this explanation, I'm just going to be entering two trades. All right, two trades at the same level. So I'm just going to tap this button twice. Right, tapped it twice, right? And then I will have to view the, sorry, not this. I will have to view the terminal. Okay, so this is a demo account, like I said, and for the purpose of this video, I just need to explain what twin trading exactly means. Now, this is not exactly identical entry point, so I'm just going to use buy limits or buy stops instead. Let me go closer and I'm just going to, okay, let's just try that again. Let us try that again. Okay, yeah, we have two identical trades now. You can see this is identical, the same entry point. Okay, now each of these trades serve a distinct purpose. All right, it allows you to balance profit potential with effective risk management. So after you enter two trades on the same currency pair, all right, with identical entry points, you're going to set your take profit at different levels. Okay, so basically that is how this method of trading works. This is how this strategy works. All right, so I am just going to set the first take profit to be at let's just use 0.653 and 0.655. all right, 653, all right, and then 655. Sorry, 655. Okay, and the stop loss level should also be at different points. So let's just use let's use here and here, or let me use here and here. All right, oh no, I'm just going to use beneath this new candle. This is the 1 hour chart, right? So I'm going to use beneath this candle and beneath this candle. So I'm going to use 648 and 649 and 648. Okay, we're going to use 649 and 648. All right, 649 and 648. Okay, so the same identical trades at the same entrance point or entry point, but different take profits and different stop losses. That's what we call twin trading. Okay, now this approach gives you the best of both worlds. You can lock in some profit early while letting the other trade run to potentially maximize returns. Okay, so it's all about striking that perfect balance between cautious trading and staying aggressive enough to ride strong market trends. Okay, now I made the stop losses and take profits close just so that we can see them clearly. All right, it doesn't mean that your stop loss and take profit are going to be real close like this. Okay, if you are a scalper, then it might be close, but if you are more of a day trader or a swing trader, you might have actually distant take profit levels, right? You might want to target perhaps when you enter, you must have done your analysis already, right? And then if it is a buy trade that you want to enter, you might set your stop loss at a significant resistance level. Perhaps your first resistance can be somewhere around here, maybe if you're a day trader, right? Then your second resistance can be even at a more distant place. If you are a swing trader, right, maybe your trades could run for a few days. You could set your first take profit can be around here. Your second can literally be around here, right? As a swing trader, but as a day trader, then you might want to be, more, conservative on that. So the first can be around here, maybe second can be around here because maybe you are probably targeting to close your trades within that same day. All right. So what you need to know is that twin trading is effective because it addresses two critical aspects of trading, which is risk management and emotional discipline. So starting with risk management, the essence of splitting your positions into two trades is that you can secure a portion of your profits early. Now, remember that you must have already done your calculation and determined what lot size to use. All right. You must have done your calculation already and determined what lot size to use. So if the lot size you were supposed to use is 0.1, for example, then you can split it into two, 0.05, 0.05. You're going to have two trades, 0.05, 0.05, identical entry point. All right. So those two 0.05 trades make up that 0.1 trade, all right, that you initially wanted to enter. Okay, so you get the point. All right. Now, when you do that, yeah, you can secure a portion of your profits early. That is the trade that has a closer take profit level, reducing the psychological pressure of staying in the market too long. Okay, now the second trade allows you to capitalize on the bigger price movements, which means you are not leaving money on the table if the trend continues. So you get the point. You are trying to lock in some profits after the price moves in your direction for a while, and then you still retain the second position in case of if the market moves even further. All right. Now, emotional discipline. How many times have you closed a trade too early because of fear or hesitation? Twin trading can help you avoid this, right? By setting predefined targets for both trades. You take emotions out of the equation. This makes you a more systematic and consistent trader. It's also versatile. You can adapt it to any trading style, whether you are a scalper, a day trader, a swing trader, or any kind of trader. The key is to ensure your risk to reward ratio aligns with your strategy. All right. Now that you know why twin trading is so powerful, let us get into the practical steps of setting up twin trades. So the first step is to identify your trade setup. All right. You can decide to use your favorite technical indicators. Remember that twin trading is not exactly a strategy in itself that tells you when to enter a trade or when to exit a trade. It's more like a concept or a strategy, a kind of method of trading that does not exactly tell you when to trade, right? So it's a strategy that you ought to implement in an already existing strategy. All right. Twin trading is not a standalone strategy. You must have a trading strategy for you to be able to use twin trading. Okay, I hope I explained it properly, right? Because if you do not have a strategy that tells you when to enter a trade or when to exit a trade, or you do not know how to do any form of analysis, then you will not be able to use twin trading effectively, because twin trading is just a concept whereby you try to manage your risk, effectively by splitting your positions into two identical entry points, different stop losses, and take profit levels. All right. So after you have identified your trade setup, and you have, whether you are a trader that focuses purely on price action or use technical indicators, whichever the case may be, you have to make sure that your trade setup has been identified first. And then the second step is to enter two trades at the same price point. All right. So let's say you are risking 2% of your account on this trade. You have to split that risk equally between the two positions, which is going to be 1% per position. All right. Now, the step 3 is to set your targets. For the first trade, you can use a conservative take profit level. All right. Such as the nearest resistance zone. Right. For the very first trade, you can use the nearest resistance zone, just like I did here. Right. The very nearest resistance zone. Okay, because we can see there was a form of reversal, although I could have still decided to move it up a bit to this point, right? So that's for the first. Then for the second trade, you can aim for a more ambitious target, like the next major resistance level. For the first trade, you can actually use a risk to reward ratio of 1:1. Then for the second, you can even move it further to 1:3, or and the next major resistance. But the first trade should be at the very first main resistance level, or risk to reward ratio of 1:1. All right. Now the fourth step is to manage your stops. Both trades should have. You can actually use the same stop loss levels though for your two trades, right? You can use the same stop loss levels because you are actually sharing the risk, right? You are sharing the risks across both trades equally. So if you are risking 1% for the first trade, you're actually risking 1% for the second trade as well. Okay, so ideally, your stop loss levels should be the same, right? They should actually be the same. Yes, they should be the same. Now, finally, monitor your trades, but don't interfere unless you have set your trailing stop losses. Okay, so if you do not have trail stop losses set up, then you should monitor your trades manually. All right. So you just watch out for, how the price moves and let the market do its thing. You don't have to exit after you have done your analysis properly. You don't have to exit halfway. All right. You already entered your trades. You already set your stop loss, set your take profit levels. Just allow the market to do its thing. All right. Now, before you start using twin trading, here are a few quick tips to ensure success. The first is to stick to your plan. All right. Predefine your entry, exit, and stop loss levels. Okay. Don't make impulsive changes mid-trade. Do not suddenly exit your trade halfway when you have already set your levels. Allow the trade to run. Okay. Secondly, use reliable analysis. You might want to combine technical indicators, indicators of your choice. You might want to just combine them. For example, moving averages, Fibonacci, retracement levels, RSI, and all of that, just to confirm your setups. Okay. And then thirdly, practice this strategy on a demo account. Practice this strategy on a demo account. It's very important. Test it on a demo account first before applying it in live trading. Fine-tune your approach to fit your style. Okay. And then lastly, adjust your risk properly. Always calculate your position size based on your risk tolerance and account size. All right. Over leveraging is a big no. Okay, it's a big no. Now, by incorporating these tips, you'll build confidence in your trading process and improve your long-term performance. All right, and that is it for this video on twin trading in Forex. I hope this strategy sparks some fresh ideas for your trading journey. If you found this video helpful, make sure to smash that like button. It really supports the channel and helps us reach more traders like you. Don't forget to hit the subscribe button and turn on the notification bell so you never miss an update. And let me know in the comments if you've tried twin trading before or if you have any questions. I'd love to hear your thoughts. Thank you for watching, and I'll see you in the next video. Happy trading.